What's up, Legacy Builders? I'm Rob.
I'm Reshawn, and this is Learn, Hustle, Grow. Learn, Hustle, Grow is all about creating a legacy. We're sharing our passions for money, marriage, and travel with other legacy builders like you.
This video is going to be fire. Make sure you watch all the way to the end, because in this one, we're giving you the game.
It's been more than a year, but we remember it like it was yesterday. We were 5 years into a 15-year mortgage, and we had decided to pay it off. It didn't seem real, but we were doing it.
Reshawn and I sat in a large glass cubicle with a female bank representative. After telling her we wanted to pay off our house, we completed a wire transfer. The crowd goes wild. The crowd was the banker. She was excited for us.
It was done. I thought there would be more of a celebration at the bank. Where were the balloons, streamers, confetti? The giant key to the city.
Right? Before we tell you the rest of the story, go ahead and subscribe and hit that notification bell. You know you want to.
How would you celebrate being debt-free and paying off your mortgage? If you have watched our other videos, you know that we decided to travel the world.
One of the best decisions we ever made was keeping our first house. Initially, I wanted to sell the house to purchase a home that would be ours. I liked the house, but it had been purchased by my wife before we met, and I wasn't sure how I felt about that.
It would have been so easy to follow the status quo of buying a new house as newlyweds. The right house in the right neighborhood means something. It would let everybody know that we had made it. People would see that we were a power couple.
At the time, it just didn't make financial sense for us. Instead, renovating gave us a feeling of a new house without a new mortgage. Reshawn bought the house for $150,000 in 2003. This was 5 years before we met. Our family stayed in that house for another 5 years.
This 1,500 square foot home is in a great location. It is close to elementary, middle, and high schools, all of which are well funded by our high property taxes. In 2013, we had no plans to move, but the low interest rates got our attention.
After the housing crash, interest rates were half of what they were in 2003. Yes, it was time to invest. We started looking for a rental property. Little did we know, housing prices had begun to rise.
We were unpleasantly surprised by the price of homes in our desired area. In 2013, our budget for a rental was $150,000. The market price for a 3-bedroom, 2-bathroom home was $200,000. Change of plans, we were now looking for our new home. It was just like an episode of HGTV.
We began with a $250,000 budget and a wish list in a specific neighborhood. Unhappy with what we found, we had to broaden our search. Before long, we realized we were not open to moving more than 5 minutes from our neighborhood.
We increased our budget to $300,000. We also compromised on a rear entry garage. After a few weeks, we found our 4-bedroom, 2.5-bath home on Rob's birthday. We agreed on a price and a deferred closing date. Our oldest son was graduating high school at the time.
Why did we decide to buy a bigger house when the only child we had at home was going away to college? Simple. Because she wanted it. While I was focused on the rental property, I did like the idea of having a man cave.
I wanted an open floor plan for entertaining. It really was like an episode of House Hunters. Turning our first house into a rental made the decision a win-win. We loved this house when we purchased it, and we still love it today.
While purchasing our new house, we refinanced our existing mortgage from 30-year to a 15. There are no closing costs thanks to a VA offer. We used 2 different lenders to accomplish this. With the stroke of a pen, we shaved off 5 years from our mortgage. It cost us nothing but time.
If you're following, you know that we had already paid the first 10 years on the 30-year mortgage. With cosmetic updates and major repairs completed just a few years earlier, the house was ready to rent out.
What does this have to do with paying off our current house? Let me explain. When we purchased our current home, we put down 10%. Why not 20%? What about PMI?
Private mortgage insurance is required when there is less than 20% equity in the home at the time of purchase. With our 10% down payment and negotiated price, our lender waived PMI.
We got an incredible 2.85% interest rate on a 15-year mortgage. The low interest rate allowed more of the monthly payment to be applied to the principal. After 5 years, $100,000 of the $300,000 purchase price had been paid.
During our first 5 years in this house, we also paid off the $70,000 balance on the first home. Our tenants helped by making mortgage payments for 5 years while the value of the property increased.
We could use all or a portion of the equity in our first house. We could put down payments on more rentals, or we could pay off our primary residence. We do not believe in being over-leveraged.
Purchased for $150,000 in 2003, the house is valued at $250,000 in the current market. Regardless of what your property is valued at, the market determines what you can charge for rent. While appreciation is awesome, our rental properties must cash flow.
Rent paid by our tenants must cover the mortgage, property management fees, and maintenance. For that reason, we chose to take out $150,000 in equity and another $50,000 from our stock investments. Have questions about stock market investing? Check out our video, Investing 101.
In order to gain access to the equity, we executed a cash-out refinance on the rental. Cash-out refinance is a commonly used practice for real estate investors who want to gain access to additional funds to purchase more properties.
Let's be clear. We know that not everyone in the real estate and personal finance community agrees with paying off your mortgage.
Although we had a great interest rate on a 15-year mortgage, we knew that we would not feel comfortable leaving our corporate jobs with a $2,600 monthly mortgage payment.
For those of you whipping out the calculator, our mortgage payment included an escrow for taxes and insurance.
Even if we had decided not to spend 2019 traveling the world, there's just something about going to work every day knowing that you would not be emotionally or financially devastated by a layoff.
I quit! We paid off our mortgage. This decision gave us immeasurable peace of mind. It has also enabled us to see the world in our 40s.
Having had this experience, we are big fans of turning your starter home into a rental, especially if the rental market enables cash flow.
You don't have an investment property? Want to reduce your housing costs or pay off your mortgage early? Take the following actions. Before you do anything though, contact your mortgage company to find out if there's an early loan prepayment penalty.
Number 1, start with a down payment that avoids PMI. Either purchase your home with equity or be prepared to make the 20% down payment. Purchasing a home with equity varies based on the current market. You may also ask your lender what their requirements are to waive PMI.
Not sure when or if you plan to purchase? Assuming you are maxing out your 401k, save your 20% down payment in a Roth IRA. The IRS allows you to withdraw the funds tax-free and penalty-free if you meet the following criteria.
You and your spouse are first-time homeowners, defined as not having owned a primary residence in the last 2 years. Your Roth IRA is at least 5 years old, so if you don't have a Roth, get one now. You must use the funds within 120 days of receiving them.
Number 2, make biweekly payments. Splitting your regular mortgage payment into 2 adds an extra mortgage payment by the end of the year. This shaves off years.
Some lenders require an enrollment fee and service charge. Others may not charge anything, but require you to fill out a form. Contact your lender for more information.
Number 3, divide the cost of one extra payment by 12. Pay additional principal on your mortgage every month. This allows you to make an extra payment and avoid bank service fees. The lender must be made aware that any extra payment goes towards your mortgage principal.
Number 4, get a roommate or two. Before you say no, think about what it would look like if you could make an extra payment quarterly or even better, monthly. The end goal is to pay your mortgage off early and save on interest. Isn't it worth being a little uncomfortable?
Number 5, downsize your home. Do you have extra space? Don't like the idea of a roommate? Sell your house and get something smaller. Can't find anything in your area? Are you open to relocating? Check out our video, 6 Reasons to Relocate.
Number 6, recast your mortgage. Have you come into a lump sum of cash? If you have an opportunity to make a payment of $10,000 or more, contact your lender. Ask about the opportunity to apply those funds to your principal without changing the terms of your loan. This is actually an opportunity to lower your monthly payments. You could pay down your mortgage and get some monthly relief.
Number 7, live rent-free. Do you want to be an investor? Consider selling your single-family home and buying a duplex or triplex. Live in one of the units and rent out the others. It's called house hacking. We'll do a more in-depth video on the topic at a later date.
Number 8, refinance your mortgage. We refinanced our first mortgage from a 30-year to a 15-year, cutting the interest rate in half. Depending on how long you have been in your home, this is another opportunity to shave off years.
Explore your options. Find out if your lender has a reduced or $0 closing cost program. If not, find out what other lenders have to offer. As long as your credit's good, you have the power.
If you are interested in paying off your mortgage, we are assuming that you have no other consumer debt. In addition to sharing our own experience, we have provided 8 actionable ways to pay down your mortgage or reduce your housing costs.
If you cannot use at least one of these ideas, ask yourself, how serious am I about changing my circumstances? Give us some feedback. Was this helpful? What would life without a mortgage do for you? Comment below.
See you in the next video.